Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me are Surbhi Upadhyay and Pavitra Parekh. Well, a little bit of a calm, right? After the carnage over the last 4 trading sessions, today the Indian markets are holding up in the green, up 0.4% on the benchmark indices following upbeat rates, upbeat cues coming in from the global market. But that intraday chart will show you that the optimism to some extent is waning. From the top of the trading session, 17,211, the Nifty has exactly lost 100 points. So that early morning gap up opening above 17,200 has not held, and some amount of profit booking has set in. It's been a gradual, climb down in the first 1.5 hours. That said, we're still up in the green right now, and the Nifty is up 70 points, Sensex up 200 points. The advanced decline ratio so far is fairly steady. You've got 2 stocks in the green for 1 in the red. Nifty metal, the metal stocks are leading the gains today. So the Nifty metal index is a gain of close to about 1%. The pharma index rebounds after hitting a 52-week low yesterday. So on those battered levels, there is some green today. Bharti Airtel is sulking in trade because Jio is making another push at garnering postpaid subscribers. Could eat into their share or Vodafone Idea's share, but the street is a bit worried. Asian Paints, on the other hand, is celebrating the decline that we've seen in crude prices. Asian Paints is higher in trade, and so is BPCL. So these are some of the stocks that pop in terms of the large caps. Hi.
Hi, ladies. Yes, absolutely. Take your point, Reema. We have given up from the top, and I was looking at some of the interesting reversals, and I think Reliance is one of them. Pull out the intraday chart of Reliance Industries. It started really well because of the news that we'll discuss as we go ahead on the show about them getting a little more aggressive into the postpaid side of things. But that excitement didn't last. Reliance has anyway been an underperforming stock for the past several weeks, and again now it has slumped to the lows of the session. One big contributor to the Nifty's overall downward move off from the highs as we speak. But having said that, banks are still offering a great counterweight. So the bank index, the bank Nifty is up about 0.5%, and most of its key constituents are holding out quite okay. Though even the stocks like ICICI Bank, HDFC Bank, they're all well off the morning highs, but you've still got some green for what it's worth and a little bit of buying in tech. But Pavitra, I guess everyone agrees this is very, very tentative. We're early on in the day and we're already losing momentum and steam. So guess need to wait and watch.
Oh, absolutely. And you guys were pointing out Reliance, which of course has seen a sharp drop from the highs. But a lot of the banks, right? The PSU bank index is at the low point of the day. So that one has come down significantly. Take a look at SBI. That is at the low point of the day. All of the large cap banks actually at the low point of the day. So do keep your eye out on that. What's encouraging is that for now, at least the mid cap and all right, there's some important news flashing on your screen. This is big. Nilkant Mishra, Credit Suisse may join Axis Bank. This is what we're picking up from our sources right now. We're picking up that he's set to lead Axis Bank's research business after moving out of Credit Suisse. So this is important. This is information that we're picking up from our sources right now. So we will bring you any more details that we can on this as we do get it. But as I was saying, for the market as well, what's looking good right now is that the mid cap and small cap index is holding up better than the frontliners at least. So that pack is still seeing some good strength. Like Reema was pointing out, the entire metals pack is doing well. So a lot of the mid cap metal names also, really shining in trade today. Some of the larger ones will be up for you. So that's what's really going on with the market. We will talk more about this. By the way, this information that's flashing on your screen is information that we're getting from Bloomberg. Once again, Nilkant Mishra is looking to move and may join Axis Bank from Credit Suisse. That is the information that we're picking up from Bloomberg right now, and he's set to sort of lead Axis Bank's research business. So that is some important news that we're picking up right now. But let's get your corporate conversations as we kickstart the show. IT solutions provider Mastech is the first company on our radar. The company has won new businesses from Dubai-based environment solutions provider Delsco. As part of the tie-up, Mastech will deliver a cloud-based integrated platform for digital transformation of Delsco's business. So Ashank Desai, the vice chairman and MD of Mastech, is here to tell us more about that and also what the outlook really looks like for Mastech. Mr. Desai, thanks a lot for joining us. This is Pavitra. If I can just begin by asking you about this partnership, can you take us through, what the deal size is, how many years it's spread over, and what is the kind of potential that you see here?
Thanks, Pavitra. Great to be here, CNBC-18. So Delsco is one of the leading people and environment solution provider, 85-year-old company, 14,000 people, They have almost, I think, 3,000 plus customers. So they have very complex need of what we call as workforce management. That includes scheduling, tracking, analytics, absence management, and with today's gig economy, this particular segment is going to grow very fast. Solution provider around workforce. So to us, this is important not only as a business, but building an IP for this kind of business, which is going to be a growth engine for coming era. So we have built an IP called Workforce Scheduler, which is fairly allowing them to do this management of advanced scheduling, tracking, etc., on a cloud transformation journey. So what we expect is certainly a great improvement in terms of their efficiency and bottom line and so on. But more importantly, as I said, it allows us a strong position in this particular segment, which is important and growing. And as we are building IP, it still strengthens our position there.
Okay. Could you give us some indication about the size of the deal and the duration? Will this constitute a large deal for you?
We cannot disclose any specific revenue here, but this particular deal will require implementation to start with over next many quarters. And we expect, obviously, that as we start growing this particular field in that large company, we may see more opportunities to expand in the company around this workforce management issue that we have. So we are very excited to have this particular segment, as I said, in our armory for future growth, as well as for this particular company.
Got it. Okay. So that point is well taken. But would you constitute this deal as a small deal, medium-sized deal, large-sized deal, based on your profile?
No, we would not call it small-sized deal. It is somewhere in medium to larger than medium kind of deal. Particularly in Oracle segment, it would definitely fall in the medium to large end of the deal.
Got it.
Okay, got that. So it's a significant deal for you. Mr. Desai, I just want to move to a different subject as well, and one that the market has really been grappling with. That is the exposure that Indian companies, particularly Indian technology or startup companies, have to the US in terms of US banking. Could you tell us with respect to Mastech? I don't know if you did any business with Silicon Valley Bank. If not SVB, what is the exposure like with the other tier 2 regional US banks beyond the top 5-6 names?
So we have, of course, not banking with SVB. However, we did a complete check of our customers, particularly smaller size customers, including our investments in a startup, etc., and looked at their exposure. So exposure, as we speak, is nil. We are still investigating, but there is nothing large or nothing that of any significance that we have with SVB. And we obviously deal with large size banks, etc. So I don't think to us this has any implication in terms of business or liquidity issue.
So any exposure to regional banks?
Sorry?
So no exposure to any regional bank, right?
Regional bank, you said? Sorry, I couldn't hear you.
Yes, regional US bank, sir.
Yeah, absolutely.
Okay, no exposure there.
Okay, so even through your recently acquired Metasoft, you don't have any kind of exposure, right, to these?
No,
because they do keep. Okay,
no.
Just moving on once more, you recently did appoint Mr. Vijay Iyer to lead the US business. Can you tell us what is the key ask over there? And also, I think it contributes around 20, and I mean, it's sort of been going on ever since the start. Do you think we're set for yet another, ugly second half?
So, a couple of things. Good morning. One, I think we still haven't got an intraday reversal signal as yet on the upside. We are very oversold. So we had actually, yesterday talked about covering shorts in the afternoon session and then possibly, not going long. The gap up is not sold into, but we are still oversold, which means that the market might get choppy without giving a reversal on the upside. So most likely 17 to 25 to 50 on the upside to about 17,000 on the downside will be the range for the next couple of days. Though I suspect because of the oversold levels, there will be one attempt to break past on the upside, and therefore shorting may not be the best idea. So we are trading with more of stock-specific biases, but broadly believe that the market might take a pause, even give a pullback in the next 2-3 days with intraday volatility. And on the pullback, I think that's where we'll explore shorting from higher levels when we see weakness again. I think that will be a good level to enter fresh shorts again.
What could be the level up to which the Nifty pullback could take place, where you would consider initiating a short?
Yeah, my initial feeling is that 17,250 or thereabouts should come into play. In fact, 17,280 was the level I was watching in the morning, but the intraday averages keep on declining, so they've now come to about 17,250. 17,225 also is yesterday's high and a part of retracement levels from the of the overall fall. So I think around 17,250 is where some kind of shorting can be seen, and in case then we see some kind of signals turning negative again strongly, then maybe aggressive shorting will happen. But I think around 17,250 I would want to buy into at least put options for the month of April.
Okay, got that. Mitesh, any trading ideas for the time being?
Good morning. I have a buy on National Aluminum. I think that's a stock, which is reversing nicely on the upside. It's held on well in this corrective market. Now it could possibly gain some steam on the upside. So buy here with the stop at 82 and look for a first target of around 88 to about 89 on the upside. While on the other stock, I think, a PVR is reversing from very oversold levels. So that could be a buy. Keep a stop below levels of 1550 here. Look for a 1620 as a trading target.
Okay, all right. Thanks very much for the calls. We'll see you again later in the day, and let's see if the market can indeed hold on. Right now, we've still got a fair amount of green on the screen. Quick break. On that note, we'll come back and discuss the fundamentals and a couple of stock ideas with Devang Mehta of Centrum Wealth Management.
Welcome back. KPIT Tech is the stock on our radar. It's higher by 2.7% after the company announced a partnership or a deal with Honda in the area of software-defined mobility. So basically, KPIT will now provide all the software required for Honda's cars till 2030, and this will expand to cover 2,000 professionals. This is the second large deal in the software-defined vehicle space for KPIT Technology, because in November of last year, so 3-4 months ago, they had signed a large $100 million plus deal with Renault, and now they've partnered with Honda. Just a quick word on what software-defined vehicles is. Well, earlier, your experience depended on the hardware of the car, and now it's increasingly changing towards software. So the software in any automobile car will help with connections, automation, and even personalization. So it will help, your cars will now be fitted with so many sensors which will go feed into the cloud, and that will come back via a loop and give you information more about the car. So that's about the connection. It will help with personalization as well. So everyone can download the apps which they require via software as a service. So there are a plethora of software applications which are now available in cars, and KPIT Technology specializes in it, and now they will be partnering with Honda. And this is the second such large deal, not large deal, but second such deal in the software-defined vehicle space that KPIT Tech has now announced today. So that's just a quick update on that. But let's talk markets. Devang Mehta, Head of Equity Advisory at Centrum Wealth Management, is with us on the show now. Devang, to talk about mid-cap IT, do you think there is a risk of earnings downgrades in Q4 based on the developments taking place globally?
Thanks for having me on the show, Rima. Yes, I think probably what has happened for the entire IT sector, be it large cap, be it mid cap, there has been a big valuation correction, valuation contraction that it used to command during COVID times, and in fact post-COVID, when there was a lot of focus on efficiency and productivity improvement. I think most of the IT companies in the last quarter, some of them came with good set of numbers. Some IT companies, despite the street not expecting such a good sort of growth as well as good commentary, I think most of them contradicted the street and announced some good set of numbers. Even I think we were impressed by some mid-cap IT companies who didn't post great numbers, but the commentary seemed to be a little more booster towards what is going to happen. And if the world is talking about probably a US slowdown or a recession, I think there is not much of an issue for all these companies who are sort of gaining more and more momentum in terms of being competitive in services across the world. So my sense is a lot of this mid-cap IT companies where valuation contraction has happened from say 45-50 P to a 20-25 P. Just a classic example, a company company like L&T Technology Services, just not recommending the stock, but the valuation collapse has been around 50-60%. I think probably the company is doing all the right work in the ER&D segment, robotics, artificial intelligence. Such niche companies should probably be considered as being part of portfolios rather than getting into pure play mid-cap IT.
Okay, so you're looking at some of those names on the technology side. Pretty interesting moves happening in a couple of paint stocks today. Devang, thought I'll get your inputs on this. By the way, Asian Paints is doing quite well. After a long time, you're seeing a 4% sort of a surge in Asian Paints. It's not the only one. Some of the other players beyond the index, or Axo, Noble, Shalimar Paints, Berger, there's some green on paint stocks. Now, would you ascribe anything more than the crude tailwind to this? That could be a sentiment impact that's rubbing off today, but otherwise, is there any reason to look at any fresh money putting it to work in paint stocks?
I think yes, Surabhi, very good question. In fact, what has happened is traditionally there has always been a history attached to Asian Paints and a lot of such home improvement themes that these stocks have the tendency to not correct even during difficult cycles. And we have seen that a couple of years here and there, but they maintain their 18 to 20% CAGR growth, at least on the market cap growth front. So my sense is that this has been an extended period of correction. The stock has seen a big correction from say around 3,600 to around say 2,900 levels. Also, I think more or less what we have seen is home improvement as a theme. Be it new real estate sales, or be it even home improvement as a theme, or home refurbishment. My sense is that the next couple of years belong to this type of themes, be it paints, be it adhesives, be it fast-moving electrical goods, ceramics. We have been very bullish on this theme. Of course, there has been a hibernation of around 6 months, 1 year for this type of stocks. I see no reason why these companies would not do well. Of course, a valuation correction has happened here as well, as I talked about even mid-cap IT. Crude is a tailwind. I think you will see probably in the next couple of quarters good margin expansion as the inventory pressure start to sort of become a tailwind rather than a headwind.
Okay, got that. Devang, good morning. Thanks for joining us. I want to ask you about the telecom space. You know, we had Reliance Jio announce their new family plans and coming forth very aggressively right now. What do you think for the entire sector? Do you think the possibility of a price hike is just pushed back significantly for now? And I mean, of course, this is in the postpaid segment, which is less price sensitive, but your call on the telecom space now?
Pavitra, yes, absolutely right that this segment, or rather this sector, has always seen sort of competitive headwinds arising from nowhere. Maybe Bharati, maybe Reliance, or even Vodafone earlier used to some way come out and talk about aggressive plans as such. So what I think is this is a very capital intensive sector. Ideally now there is sort of a duopoly, or you can say sort of an oligopoly in this sector. So most of the people would stand to benefit over the longer term. But in the shorter term, we all know that how probably whenever there is a 5G auction or something, most of the capex of these companies get towards this type of things. Though it's a long-term positive for these companies, but a lot of cash burn also happens initially. Though I think Jio is now operationally profitable, Bharti is a good profitable company. We're not generally big fans of as such telecom sector. But what importantly is, for example, Reliance now at a 52-week low, probably all the businesses firing on right cylinders, be it the old economy businesses, the new economy, as well as the retail business. Most of these companies, most of these segments are doing very well. My sense is that probably market, if market needs leadership, there has to be maybe banking stocks or IT stocks or something like a Reliance, which are now lagging to probably take that leadership role once the FII flows resume.
Devang, great conversation. Thank you very much for joining in. On the other side, we'll talk telecom. Reliance Jio is in focus on the back of its new postpaid launches, Jio Plus. We'll get into the details.
Welcome back. The market's holding on to a gain of about 100 points. Let's keep focusing on some more stocks that are in the news. Now, Reliance Jio has launched new postpaid family plans. This plan is called Jio Plus. Rima is standing by with the details and what it could mean for the industry as a whole. Rima.
Thanks so much for that. So as you pointed out, Reliance Jio has launched new postpaid family plans, Jio Plus. One for $399 and the other one is for $699. So the $399 plan will also offer you 3 additional add-on SIMs or connections for 99 rupees per SIM, which basically means for a family of 4, the monthly charge is $396. $399 plus $99 plus $99 plus $99. There is also another family plan which offers higher value. By higher value, we mean OTT connections, and that's going to be priced higher at $996 for a family of 4. Now the question is, how do these plans compare with peers? Now let's talk about Bharti Airtel. Now for starters, Airtel's family plan starts with $999. Which means for a value-conscious family who wants to bring down the cost, the only available cheap option is Reliance Jio. Reliance Jio's $699 plan is much cheaper than Airtel's $999 plan. But these are not like-to-like comparable because Airtel's $999 plan also offers you higher OTT connection of Amazon Prime as well as Disney Hotstar. So if you want a comparable plan, it compares with Jio's higher value plan of $996, which basically means at the upper end, the plans are comparable. Now let's talk about the entry-level individual postpaid plans. Now, currently Jio offers a 199 rupee plan, but for new subscribers, it's now available at 299. This is much cheaper than Bharti Airtel, which is at 399. There is a discount of close to about 30%. Now, the big question is, can this spur Jio's postpaid growth? Now remember, Jio has done quite the smart thing because for new subscribers, the entry-level postpaid tariffs have gone up by 50%. So here they are trying to extract more. But for a family plan, they are giving customers a cheaper alternative to peers, but with lower value. Now, Reliance Jio up until now has had limited success in postpaid despite their earlier plans being significantly cheaper than Airtel as well as Bharti Airtel. And now, while postpaid is only 7.5% of the overall subscriber base, it's a lucrative segment given the higher ARPUs. Let's now run you through what brokerages say about these. CLSA says although Reliance Jio's new entry family postpaid plan will renew expectations of subscriber gains, remember, postpaid subscribers are not as price sensitive, and Reliance Jio's 996 offer is comparable to that of Bharti Airtel, and Vodafone Idea also offers a similar plan of 999. Reliance Jio's individual postpaid tariff hike of 50% will make the entry plan comparable to Vodafone Idea and cut Bharti Airtel's tariff premium from 100% to 33%. Kotak Institutional Equities says Reliance Jio's renewed aggression against our expectations of an increase in postpaid tariffs is surprising, and this could delay the prospect of tariff hikes in the near term. However, they do not expect Reliance Jio to get aggressive in the larger prepaid data segment. So right now, Reliance Jio is making another attempt to get some subscribers in the postpaid segment, which is the high ARPU segment.
All right, Rima, thanks a lot for getting us all of those details. Standard disclaimer on your screen right now. By the way, Bharti Airtel is the top loser on the Nifty today. It is down 1.5%. But with that, we need to get into a short break. We'll get you more on the markets when we come back. Welcome back. You're still tuned into Trading Hour, and it is time for our special segment, Fin Street, where Abhishek is standing by with the details on the growth trajectory in the credit card business. So take a look at that.
Well, let's focus on the credit card business momentum. Now, the spends grew by 45.5% YOY and about 0.9% month on month. Now, the spends are the second highest post Diwali. However, credit card issuance have remained much healthier than expectation. So, in Jan of 2023, the credit card issuances grew by 1.6% month on month and about 17.5% year on year. Average spends was at about 15,532 rupees, up nearly 24% YOY, but a decline of 0.6% month on month. Now, average spends trend has remained on the healthier side. Let's take a look at the top 4 performance. From July of 2022 to Jan of 2023, spends market share has declined by 307 basis points for ICICI Bank, 75 basis points for SDFC Bank. However, Axis Bank has gained market share of 52 basis points and SBI has gained a market share of 231 basis points. The top 4 market share in spends have moved from 73.85 75% in July 2022 to right now about 72.86% in Jan of 2023, which is a decline of 99 basis points. Credit card market share has moved by about a reduction of 155 basis points for ICICI Bank, HDFC Bank seeing a decline of 146 basis points, Axis Bank seeing a decline of 75 basis points, while it has been a gain of 256 basis points for SBI, which is now standing at a market share of 19.7%. Hence, it can be clearly seen that amongst the top four, SBI is the only player to see a market share gain in cards as well as spends. The top four market share in total cards has moved from 69.95% in July 2022 to right now about 68.75% in Jan 2023, which is a decline of 120 basis points. Over the last 4 months, amongst the top four, HDFC Bank has lost market share. So HDFC Bank has lost a market share of 142 basis points when compared to a gain that you are seeing for ICICI Bank of about 32 basis points, Axis Bank a gain of 46 basis points, and SBI a gain of 101 basis points. So while in the last 4 months, the credit card issuances, HDFC Bank has gained market share by 5 basis points. This compares to 55 basis point market share gain for SBI, 18 basis points for Axis Bank. ICICI Bank amongst the top four is the only one to lose market share by nearly 50 basis points. So the outlook is that credit card issuances have remained strong, spends have declined a bit, but with summer holidays coming up, you can expect the spends to increase. Need to watch out for the revolver rates, which is actually on a declining trend for the entire sector. Many private lenders are still giving out huge offers to credit card customers in order to attract them towards their bank. HDFC Bank has reduced its offers to customers, a trend which may or may not be followed by other players as well. So we will wait and see reaction of peers on HDFC Bank's reduction in the offer rates.
Abhishek, thanks a lot for bringing us all of those very interesting details on the credit cards. But with that, we have to wind down on this edition of Trading Hour with the news that the markets have been pretty steady over the last 1 hour. It is a 95-point gain, but we're around 70 points off the day's high. It is really metals which are doing a bulk of the heavy lifting today, with consumption and reliance looking a little bit soft. We're going to wind down on Trading Hour. Stay tuned. Halftime report after this short break.